सभी को स्वागत किया है मेरे यूट्यूब चैनल से। और बात करेंगे आज आप लोगों के साथ यूएस ईरान वॉर, शेक इंडियन मार्केट, एल&टी, टीसीएस, केआरबीएल and other which Middle East exposed under pressure stock market today. The US-Iran war has rattled global market, and on market morning, Indian equities feel the heat immediately. When the opening bell rang, panic was visible. The Sensex plunged more than 2,700 points in early trade. It later recovered part of the losses, but by 10:30 am, it was still trading nearly 1,000 points lower. The Nifty 50 hovered around 24,850 during that time. This is not just another volatile session. The US-Iran war has triggered deep concern about crude oil price, corporate earnings, and India's economic stability. Let's break down what's really happening. Market performance. Oil shock hit statement first. The first reaction to the US-Iran war was visible in oil price, and that mattered more to India than most people realize. India imported a large portion of its crude oil requirements, so any spike directly impact inflation, fiscal balance, corporate input cost, profit margin. Crude oil is not just fuel, it is a best raw material for multiple industries, from chemical to paints and aviation to logistics. A sharp rise in the crude price increases operational costs that adds into profitability. This fear is what pushed the market into panic mode. The early crash of 2,700 points on the Sensex reflected anxiety around and prolonged was risks, supply disruption, Middle East, or energy price shock, or potential sorrow in corporate earnings. Even after potential recovery, the damage to statement was clear. The US-Iran war is not just a geopolitical news for Wall Street, it is about economics. And why the Middle East matters so much to Indian companies? The Middle East is the key revenue engine for several Indian companies, from infrastructure to IT service, construction to retail jewelry. Many firms drive a significant share of revenue from region. A prolonged US-Iran war creates risks such as the business discipline, project execution, payment cycle getting stretched, currency volatility, reduced government spending in Gulf nation. When investors see uncertainty around this market, stock price reacts swiftly. Let's look at the companies with meaningful exposure. Company with significant Middle Eastern exposure and Larsen and Turbo. Larsen and Turbo has the operational route in West Asia. In Q3 financial year 26, international revenue contribute 54% of the total revenue. That's more than half. Over the past few years, the company secured multiple large value contracts in the Middle East. The region has been a strong drive of growth. Key financial dates and order inflow in financial year 25 3,56,631 crore and growth driven largely by Middle East investment momentum and strong capex support from Government of India as well. However, market reaction was sharp. The stock raised 7.5% intraday on the BSE on March 2. The market logic is simple. If the US-Iran war escalates, infrastructure spending in the region could show or faction escalation challenge. That's where the nervousness comes from. Tata Consultancy Service Tata Consultancy Service also has notable exposure to the MEA, Middle East and North Africa region. In Q3 financial year 26 revenue from MEA and rose 8.3 year on year and contributed meaningfully to overall revenue. The growth came at the time when revenue from key markets like India and the UK declined. That's make MEA strategically an important market reaction. Share price declined 3% and hit a 52-week low of 2 lakh 55,000 2,551.55. When markets see revenue concentration is a war sensitive geography, the stock came under pressure. The US Iran war is the implying that's concern and key international across the Middle East, and it is the Q3 financial year 26 earning call. The company highlighted it is strategies focus on expanding it is the footprint in the region. Key business highlight and secure it is the third international order for pipelines laying project in the Middle East and identified the region as key growth engine and significant opportunity across Saudi Arabia and UAE and Oman. Market reaction stock crashed nearly 12% and hit a 52-week low 517.90 on the BSC. Or Kolyan Jewelry has major retail pressures in the Middle East and present in the Middle East and in Q3 financial year 26 revenue from the region increases the nearly 28%. The growth momentum from Gulf countries has been strong and market reaction and share price dropped more than 4% intraday. The concern is not about the performance today, it about the uncertainty tomorrow. If the US-Iran war impact the consumer statement or mobility in Gulf, and economics discretionary in sector could feel the impact. Oil the core of the US-Iran war market reaction.